And that brings us to the fourth principle, because you can have had great conversations. You can have sourced the most relevant information and you can have analysed it using the most cutting edge techniques. But if you're not trusted, you're not going to achieve that influence. You're not going to get back to that persuasion. And it was Aristotle who talked about the art of persuasion being made up of ethos, pathos and logos. Ethos being that credibility to speak to your audience. Again, I refer you back to the technical underpinning that you have to have as an accountant. Be credible or your audience won't listen. You've got pathos, which is about your ability to empathise. That's back to the people skills and the communication. Understand the decision that they need to take, when they need to take it, the pressures they're under, deliver for them. And then logos. So ethos, pathos and logos. And logos is being logical. And that's obviously where the word logic extends from. And accountants, traditionally brilliant at the logos, probably need to do a bit more work on the ethos and the pathos. And that's where stewardship becomes so important. Because if you're trusted to be a steward of the organisation's financial and non-financial assets, if you are good at balancing short-term commercial considerations against the long-term value of the organisation, if you are good at bringing in concepts of sustainability, integrity, credibility, then you will become a trusted steward of the organisation, and you know what, you'll achieve that influence. And why is trust so important? Well, it allows you to negotiate better business terms, processes and conditions if your organisation and your brand is trusted. It enhances innovation and entrepreneurship, contributing to competitiveness. Because if your staff are trusted and they trust you to look after them, they will innovate. They know that it's an environment in which it's okay to fail if they're trying something new and trying to innovate and steal a march in your competition. And that means they'll be much more loyal and engaged and productive, and you'll have really great employee relationships. And in turn, that means they will have stronger external relationships up and down the value chain, because they'll be happy and engaged and go out and advocate for your business with the organisations they do business with. And that will ultimately lead you to having much greater resilience to withstand shocks and crises more effectively. So back to the piece we were talking about at the beginning, the financial crisis, organisations wanting to become much, much more resilient and not suffer the effects that they did after the last financial crisis. Being trusted, having great relationships with other organisations will really help you to withstand the next crisis. Edelman, the PR company, have an annual trust barometer. This is based on a survey of, I think, at least 20,000 respondents, so a very, very robust survey. They do it annually. And between 2014 and 2015, trust in most organisations fell. Not just in business, also in the media and even NGOs. There was a very slight increase in trust in government. And that's not good. If public trust in business has fallen, it's incumbent upon all of us to try and restore it. And management accounting really should have a role there. Again, bad news for the chief exec. A drop of 3% in trust levels in the average chief exec between 2014 and 2015. And even a drop there among regular employees in business as well. But 81% of their respondents said that a company can take specific action to both increase profit and improve the economy and society for the community in which they operate. So back again to that Michael Porter at Harvard Business School view of shared value, that profit that represent a higher social purpose are a higher form of capitalism, and it is achievable, and that's what public is now demanding.